Good evening, friends. Once again, welcome to each one of you in this Financial Reporting India's refresher course, in which we are discussing various India's Caro, Schedule 3, and other topic. And today we have with us our speaker of the day, CA Gyan Prakash Sharma ji. Gyan ji, welcome to you on this Team Casa
Thank
platform.
you to all.
And today's topic is India's 16 property, plant and equipment and intangible assets. Both the India's is about today's speaker. CI and placed at all and in IPCC as well.
I think there is some network issue.
Ganji, I think I was disconnected.
Now you are connected now.
Yeah, okay. So I was briefing about a speaker about you and about Ganji. Currently, he is a special invitee of the Internal Audit Standard Board (ISB) for the year of 21-22, and also co-opted member of the CPE committee. And he is instrumental to the various review of the financial statement, setting up the process and control in relation to risk assessment. So various US GAAP, IFRS, Ind-As conversions. So without taking much of time, I straight away request Gyan Bhai to take up the technical session and discuss in length about these two important Ind-As financial report in the financial reporting, property, plant and equipments and intangible assets. Now I request to take up the session. Gyanji, over to you.
Yeah, thank you so much, Ji. And thank you everyone for good evening to all. That today we are here again to have an interactive participation in today's seminar. And special thanks to Sumit that these type of seminars are continuously he is organizing from last many years. And in this COVID, after COVID time, we are many times we are facing like this type of seminar as an opportunity for us. So by a virtual mode, we are we are enriching our knowledge. And today again, I see that already 2 days classes already have done for this like series. And today, on third day, we are having a topic of India's 16 and India's 38, which is relating to property, plant and equipment and intangible assets. So when we talk about like balance sheet parts, so there are very important parts for balance sheet. There is a fixed asset part, because this is a major part which is any organization have to produce an inventory and to stabilize or to continue their business. So both the parts are important. Though intangible assets, we can see that in many of the organizations are not much more important, but still we will cover here that part also for some of the time. But our major coverage will be for India's 16, which is property, plant, equipment. So before going to start, first of all, I would like to share my PPT so that we can have better understanding. simultaneously we have presentation in front of us, and in the same way we can have interactive discussion, and I will request that it should be a like two-way interactive discussion, so that whatever queries you have, definitely you can raise your question, or if Sumit allow, then during the meantime or at the end of the session, whatever we feel good for us. And apart from this, Ind-As, I would like to inform you the how many informations and documents which generally we can have a help to identify or to Ind-As gap and something else. So before I going to start, we'll start my PPT first.
Gyanji, queries can be posted in the chat box so that you can take up whenever you are convenient.
Yeah. So if we will try to have like 15 to 20 minutes, approximately 15 minutes at the end of the session.
Right.
So I think that will
at
be
the end
better.
of the session, we will have an interactive session, but in between, members can post the query in the chat box so that whenever you feel comfortable, you can take up.
Yeah, definitely. Sure.
Sure.
Are you able to see my screen, sir?
No, I think you have not shared.
I think right now.
Right now, yes.
Right?
Yes. Right.
Okay. So first of all, we will start today's first topic, which is India 16 property plant equipment. And in this topic, we will cover, I would like to brief any accounting standard or Ind-As if we talk about, then there are some standard procedures in which they are segregated. So like first of all, any Ind-As or any accounting standard have applicability from which date or from when the accounting standards or Ind-As are applicable, and then the definitions part. So on which type of transactions that standard will be applicable, or which type of transactions are excluded from preview of accounting standard or Ind-As, whatever. And next step will be like a initial recognition of the asset. So any, if we talk about PP, so this accounting standard, so it means in the second stage, we will understand the recognition criteria. When can an expenditure or any activity which an business organization incurred that can be recognized as an assets. Then third part will be measurement part. Measurement, again, there will be a two separate parts. First of all, initial recognition and measurement, and then subsequent measurement. And after that, disclosure part. So this is the standard procedures in each and every Ind-As normally institute follow or MCA follow. So first of all, applicability, then recognition, then measurement, and then disclosure part. And if we talk about accounting Ind-As, then there are Ind-As issued by ministry, and apart from that, institute also in somehow in simple language or in modified language also presented Ind-As. Apart from that, if we are doing any practical examples, or if we are doing any practical scenario, then I would suggest to take a reference of educational material which have been issued by institute on each and every, mostly Ind-As. And apart from that, there are ITFG also, which is Ind-As Technical Facilitation Group. So like earlier we have EAC, Expert Advisory Committee opinions. So in the same way, when any organization or when industry face any difficulty, then institute or like there are some ITFG have been also issued. So apart from Ind-As, ITFG and educational material, we should also follow, or we should also refer, so that for better understanding. Here today, we are going to discuss like provisions of Ind-As which have been issued by ministry. So first of all, if we talk about like property, plant and equipment, then this Ind-As is applicable to all expenditure which met the criteria of recognition of an asset. However, we start from exclusion parts. So which part are not covered in this Ind-As? So definitely we will say like any asset, which any expenditure which we have recognized as an asset, no issue, but which are specifically covered by separate Ind-As, then that will not be covered here. So which type of example it can be? So first of all, example we can say like any asset like plant and machinery, it may be any land and building which are held for sale. For example, if you can say like in 2017, there is a case of General Motors. So in that case, there are significant amount of plant and machinery or any land and building, which of one of the plant in Gujarat. So that part, when company want to switch their business from out of India, so in that case, all the plant and machinery are recognized as an asset held for sale. So if though the assets are categorized as PPE criteria, but when the company want to change their business business scenario and any like decision, so that type of asset which are held for sale, that will not be covered here. There is no provision of Ind-As 16 or Ind-As 38, whatever case be, not applicable here. In that case, we will take consideration of Ind-As 105. So first of all, any expense which have a part of an asset, but which specifically dealt by some another Ind-As, so that will not be covered here. Second example, like biological asset, if you can say like we are in agriculture industry, so in that case, we having some plants or like wheat, maize, and rice, etc. So that type of asset also will not be covered here because that will be covered on agriculture Ind-As or Ind-As 2, edge case me. And apart from that, 106, exploration and evaluation of mineral resources. So any mineral resource in mining industry, that will be different treatment of the striping cost and like a surface wastage removal cost, etc. So that will be not covered here. And mineral rights and mineral reserve, that will also be industry specific. So separate activities or separate guidance issued by institute. And apart from that, one more thing that is important or which recently implemented or like in 2019, that is lease asset. So lease asset will also not be covered here, which is right of use assets. Generally, in case of any lease agreement which we have for more than 1 year. So in that case, there is separate Ind-As 116. So when 116 applicable, then on that asset, we will not apply Ind-As 16. So first of all, if we talk about, so any expenses or any activity which an organization have done which met the criteria of fixed asset, but these are excluded, these below type of transactions, so below type of activities will not be covered in Ind-As 16. There will be separate Ind-As. Now the question will arise, we have discussed that these type of transactions will not be covered by Ind-As 16, but if any asset, when we can say like any expenditure or any transactions or any amount incurred, that it should be a PPE or it should be any fixed asset. Though I'm taking the example, giving the name of fixed asset, but that is a totally changed and PPE. So we should refer the PPE for better understanding. I'm taking the name. So recognition criteria. So first of all, we will see, we know there is no specific or no much more changes from accounting standard. So same principles, when there is any activity or any asset, there is a chances or there is a probability that future economic benefit associated with them will flow to the entity. So there may be transactions of two types. First, the transaction which we have done and the benefits entity has taken immediately, like any product we have manufactured and we sold out. So that is immediate benefit we have taken. There is no such situation that we will take a benefit over the period of time. So in that case, so any expenses or any amount which we have incurred, which will give benefit entity over the period of time in future, and the cost can be measured reliably. So if the both conditions are met out, then any amount which we have incurred will be considered as assets, and we will classify each property, plant and equipment. When we talk property, plant, equipment, then definitely tangible assets, which each and every type of tangible assets, whether land and building, plant and machinery, furnitures, and whatever all. So one more thing, I think that was not in accounting standard 2 or accounting standard 10, but now in Ind-As 16, when in very first time implemented, so that was included, that each spare parts inventory. So in case of in big organizations or a big manufacturing plant, we know that there are some of the spare parts or standby equipments we generally have in our storeroom for smooth running of our plant and machinery. Because there might be a possibility that we have an important machinery, and if there is some failure, like some system failure in the machinery, so in that case we immediately need some plants, some spare parts to replacement purpose or to for repairing purpose of that machinery. So such type of spare parts and equipment, if these are specifically related to any machinery specific, not general parts, if there is a part which is we can identify that this part is specific to machine A or machine B, so in that case that type of part will also be part of plant and machinery and property, plant and equipment, and which will be governed by Ind-As 16. Earlier we can say whenever we purchase the store and spare parts or like consumables, then directly we can expense of and in P&L account. But now we need to identify whether any spare parts or consumables which we have procured that is specific to plant and machinery and that we held for use in future. It may be in 1 year, 2 years, 3 years, maybe whenever we require for replacement or repairing purpose, then we can use. So that type of inventory also we need to segregate it from our inventory valuation or our inventory, and we need to classify in property, plant and equipment. So if we are going to implement Ind-As in one of our entity or any clients, so in that case we need to specifically ask from the question from client that please give your inventory listing as on transition date, and please identify if there is such type of products which are specific to any plant and machinery. Then we need to identify and we need to segregate that product and reclassify to plant and equipment, plant and machinery. And apart from that, so first of all, we identify recognition criteria. There is no such issue because we all know very well when any assets should be recognized. But now in Ind-As, the question will start. So on which cost or on which price we should recognize an asset? So first of all, there is a very simple thing that the cost, any cost which we have incurred for an asset to bring in such condition that it can be used for in production or for our business purpose. So whatever cost we have incurred, that we need to consider in our recognition criteria. So now we are talking about like valuation part, we can say, or measurement part, we can say, on how much price we should recognize an asset. So cost price, purchase price, import duty, whatever type of taxes which we are not able to take a benefit of ITC and all things. So that will be covered in cost part. Apart from that, any additional expenditure, we can say like plant and machinery we imported from out of country, but in that case we incurred transportation charges also, and then we can say like we incurred some charges to for leveling of sand and like leveling stabilize and stones and all things in plant to fix that machine on their particular site. So it site preparation cost, or we can say like a installation cost, or any professional fees which generally we paid to any engineers for to set up that plant and machinery. So all these type of cost which are directly related to that plant or machinery, that will be part of costing part. Apart from that, one more thing that is important, generally we missed out. So that is specifically requirement of Ind-As, that in some cases we see, like especially in leasehold improvement cases, we can say, or we can say lease agreement, because sometimes we obtain some warehouses or some offices on lease basis, but there is a condition, so there is a clause in lease agreement that if we need any modification, then definitely we can do during the lease tenure, but at end of the lease period we need to we need to remove all activities or all any fixtures or structures which we have created on that lease premises, or we need to give that property in the same way in which way the lessor has provided to us. So this cost we can say like dismantling cost. So it means this type of cost also we need to very first day when we are going to recognize an asset, we need to identify, we need to recognize or trigger that if there is such possibility to incur any such type of cost. So in that case, that cost will also we need to identify or we need to take as part of plant and machinery or land and building edge case maybe. But here the question will arise and discounting question we can say like if you are talking about costing part. So we have incurred 100 rupees for any plant and machineries and all things. But we know at the end of the 5 years or 10 years, when we want to switch any factory or any whatever region, we need to remove the surface activities and surface like extra structures, or we need to put down that machinery. So any cost which we will incur after 5 to 10 years, so that cost part, we need to identify present value of that cost at today itself, and that cost will also be part of our initial cost. So discounting factors will come into the picture here, and discounting rate that will be depend on the organization, so incremental borrowing rate and different things. So costing part we say then first of all very simple costing purchase and like a non-refundable duties and discount and all things plus any professional fees, cost of site restoration and activities. And third one is important part, so which we additionally take care or we need to ask with the clients and the, like any organizations. So any dismantling cost which we thought that will be happen in future, so that will also be part of our fixed asset cost. And apart from that, so this is the first part we have discussed. So initial recognition on which price we need to do, and then again the second question on every year, or first we have recognized an asset, then the next question will arise. It might be possible that for a particular asset we have installed, but after some time, maybe a 6 month or 1 year, we face there is a difficulty to running that plant machinery, or maybe there is a significant expenditure on land and building. So if there is such type of activities like a significant repair expenditures or any replacement cost which we have incurred in future, so that cost, if we think that because incurring of that cost, our asset capacity will be increased, or we can say our asset is required to maintain in such condition, which is very necessary to maintain such asset, or to in such situation that it can create a regular production. So that will be a part of cost. But if there is a normal day-to-day repairing, like in shutdown cases in many automobile sectors or manufacturing industry, we know there are the 5 to 7 days shutdown period. So in that case, or in case, or we can say like sugar industry also. So if there is like a regular repairing costing, like any plant and machinery, cleaning and repairing, and any furnace oil, any consumables, etc. So if regular routine activities and repairing expenditures, then that will be part of P&L part. But major expenditures, then that will be a part of costing part. Here again, one more thing which we need to take care, that is, we all know there is a guidance note on accounting of depreciation also, which we can say in another way, in simple terms, componentization accounting. So if during any repairing process, we have incurred significant costing or any overall expenditures, and we know, like, for example, one of the plant and machinery, there is a motor or very crucial part that has been discarded, or that has been dismantled. So in that case, if we repair that part, or if we incur another significant costing, so that will be a individually significant part. So that part will be a costing part. And one more thing that we need to take care, that this part will be considered a separate activity, and depreciation will be charged on that part in separate, considering the remaining life of original product or original plant machinery or buildings or edge case. So that is the important thing. If there is a major expenditure, then we will consider the costing part, and depreciation will also be charged. Depreciation, how or in which way we will charge depreciation, that we'll discuss it later on also. Self-constructed assets. So in some cases, we may have some any steel industries, or we can say like chemical industries. So if they are based on the steel, some prepared some plant and machinery type setups or anything internally sheds also. So if there is a situation, so in that case, we incurred costing at self basis. We are not acquiring the properties outside from the business organizations. So in that case also, we know the what actual costing we have incurred. So that cost will be the clubbing of that cost will be a part of self constructed asset. But in that case, if we talk about like one of the steel prices, like we say, like we are charging from outside customer 1000 rupees per ton, but in the same steel we use in our internal shed process also. So we know that 10 rupees is like 100 rupees is the profit part. So our actual costing will be 900 and selling price is 1000 for outside customer. But in our case, we know that our costing is now only 900 rupees. So we will not consider price as 1000 rupees. We will consider only 900 rupees as our costing part, and that only will become our planted machinery or like a PPE part only. So any internal profit which generally we gain on any activity or transactions which will not be covered here. And apart from that, any abnormal SSTs and activities. So we know any abnormal transactions or any abnormal expenses, generally we ignore for any capitalization purpose. And apart from that, in case of some of time, we think like in deferred payment term basis, if we hire any property or any, we can say like plant and machinery or any building or anything on payment, deferred payment credit basis, which means there are some EMI or some like over the period we will pay the payment on over the period of time. So in that case, their interest component will also be included in that price. So that part, if there is a normal part which we know that yes, this is our price which we have discussed and it is the normal part which we have to pay, that will be covered in costing part. But because of any like financial crisis issue, we ask to supplier that please defer our credit terms for more than 1 year or maybe some additional period. So if there is such cases, which is the normal credit period cases, then that type of costing we should ignore and we will not be considered as part of capitalization purpose unless borrowing cost criteria or anything else which is separate Ind-As, so that are met out. So it means so general interest, any part which we pay, that will be a part of costing. And apart from that, any we can say like some of like from builder case, if you talk about like building material supplies. So in that cases, in many small activities like parking areas, generally we have, though the building is taking much more time, maybe 1 year or 2 years, but during that meantime, we are earning any revenue from small revenue from parking and any activities. So that will not also be considered from our costing part also, because that is a very small amount and very revenue nature transactions. Now we see like measurement part. So initial recognition, I think we have discussed in the first slide. So initial recognition generally mainly focus on costing part and costing which product or which activities or expenses we will cover, that we have discussed. And subsequent recognition, that is the important thing, because here is apart from cost model, there one more model come into the picture, that is revaluation model. So here in subsequent recognition cases, it means an entity earlier, first of all, recognized the asset on cost basis. And after that, if we think over the period of time, or especially in case of like a transition period, and when the organization have especially land, if they're in balance sheet, then mostly organizations like listed companies, which have a significant land base in their balance sheet before transition to Ind-As. So in that case, there was an opportunity to companies to take a revaluation model also and transition to revalue the assets on a deemed cost model or any revaluation model. So if apart from transition also we have an opportunity, or we have there are the two different models. One costing model is very simple and another revaluation model. But in case of revaluation model, we need to take care some things which is important. First of all, that is, if we are going to revalue any class of asset, then we are mandatorily required to revalue all type of asset for a particular class. Like land and building. Company have one building in Delhi and one building in Gurgaon and one building in Jaipur also. So in that case, if they want to take revaluation of land and building part, so in that case, they are required to revalue all land and building. Means the particular class, all asset of a particular class will be revalued. Though we are not required to revalue plant and machinery, we are not required to revalue furniture and fixtures part. But for a particular class, we need to take care. So entire class will be revalued if we want to revalue any asset. Not one by one options available that in particular class we revalue one area asset and we ignore the another one part. That is not possible. And apart from that, if we are going to revalue, so we have some significant basis, or we should take a help of independent valuer also, because that only we can identify the actual revaluation price. So if we talk about like cost model, then we know the very simple part, the costing part we have done, and revaluation model. So in case of revaluation also, there are some more disclosures are also required to be presented in balance sheet. Like one of the disclosure is how we got the revalued figure. So what basis we have taken, and whether an independent valuer has been involved in revaluation, or any life which management is estimating for, because of revaluation. It may be a possibility that asset life we are also revising, so there should be a proper basis also, and that disclosure also. And from current year onwards, if we are going to do an audit of March 2022 accounts, means which are year ended right now. So for financial year 21-22, there are some significant changes which have been made in Schedule 3, and apart from CARO also. So being an auditor perspective also, or being a client perspective also, we are required to give information in financial statements as well as CARO report. What information? If we are going to follow the revaluation model, or if we are going to follow a revaluation in during the year. So in that case, if there are revaluation, because of revaluation, there are the more than 10% changes in our price, our costing value. So in that case, we need to give separate disclosure, specific disclosure in balance sheet as well as CARO report also. So that we also need to take care in case of revaluation. In costing model, there is no such a specific requirement. We generally mention there as the opening, closing, and there some specific disclosures which have been given at the end of the Ind-As 16. So that we need to follow. So costing model we have done, and now revaluation part there should be a, and one more thing is important in case of Ind-As. We are required, being management, we are required to make assessment of useful life and make assessment of the asset conditions each and every year. Or we can say impairment testing part in that case. So that is the requirement. If we think that the assets are in such nature that we are not required to in 1 year, so there may be a case, in that case we may be at 2 years or 3 years, but there should be a sufficient time or a reasonable time in which each and every asset should be revisited by management, whether there is any significant increase or decrease in the price, whether significant increase decrease in the useful life, etc. So from India's perspective, we need to take care in each and every reporting period. We can say like revisit our revalue, or we can say like impairment testing we need to perform. So apart from that, property plant equipment, we can say like if we are doing the revaluation model, or if we are going to follow, then we need to take care of some things. Valuation need to be performed in every year or every reporting period, but we need to revisit. We are not required if we have done revaluation in this year. So it is not required that every year we are to revalue, unless there is a significant changes. If we think there is not much more, because we know in case of this like land and building, we have done revaluation, but we know every year there will be a price changes. There may be increase, there may be downward. So every year we are not required unless there is a significant changes in the revaluation or like revalued price. But at sufficient regularity that carrying amount does not differ the material. The same thing, if there is no significant difference, then we are not required to do. But if we think that there is a significant difference, then we need to follow the revaluation process. Or fair value, we know fair value we need to take care. So that is not much more important. If we are going to follow the revaluation, then definitely we will involve independent valuer also, or there might be a possibility that management have some production engineers and chartered engineers also, so they can also take a revaluation prices and revaluation life and etc. They can also suggest. So if in case of revaluation model, because we are talking about subsequent recognition, first of all, first time recognition, there is a cost model, we recognize the asset. Second time, there is an opportunity that we can incur cost and we can bring that cost part of plant and PPE, but simultaneously we have revaluation option also. So if we follow the revaluation model, then in that case there might be a possibility of like a increase or decrease, whatever case may. So if there is an increase because of revaluation, so in that case, the revaluation reserve will be created. But that revaluation reserve, in case of Ind-As, if we are applying Ind-As, then that will not be our regular activity part, because that is not generating from our day-to-day operations and everything. So that will be a different thing. That's why we will classify this part as other comprehensive income, OCI part, not general P&L reserve part. So revaluation reserve, if we have created because of this model, so in that case, any increase that will be considered in OCI part, and vice versa, any decrease will be considered P&L part. But we know that if there is a first time we have an increase, and in this next year or maybe next to next year, there is a situation that there are the decrease. So when we have revaluation reserve against this particular revaluation earlier done, so first of all, we will try to adjust that revaluation reserve, and then we'll go to the any excess part to the P&L, and the vice versa situation in the decrease case also. So now the question will come that transfer from revaluation surplus to retained earning are made in the following circumstances. We have done now the revaluation reserve we have in OCI, the balance. So how many times or how much amount we need to carry forward in our balance sheet. So whenever we are any revaluation reserve which we have created on particular assets, so if that asset have been de-recognized, we have sold out, we have discarded that asset, then any reserve relating to that asset will also be reclassified to the P&L, because that will be our general nature transactions. So any asset will be de-recognized, then we will reclassify revaluation surplus to retained earning, else it will be continued. Apart from that, like a depreciation part. So before going to start depreciation, we will first important thing, that is useful life. And useful life, we all know that are prescribed in Schedule 2 of Companies Act. So each and every entity and auditor also refer to the Schedule 2. But Schedule 2 suggests the useful life which are based on industry trends. These are not hard and fast mandatory rule that each and every organization is required or bound to follow that schedule to life. Management may take a life any upward side or downward sides, but in that case, whatever life they want to take, there must be a reasonable basis, and that basis must also be described in financial statements. So in accounting policy, we need to identify, or we need to especially mention what basis we have followed if we are differing from the life mentioned in Schedule 2. And if we are taking the life as per Schedule 2, then there is no such a specific requirement. We are just required to mention a one line in financial statement that useful life have been considered as per Schedule 2 of the Companies Act 2013. So first of all, we need to identify useful life either on Schedule 2 basis or either on systematic basis, which have been taken by management. In case of management, there is a significant any specific criteria or any basis has been taken, then we need to give specific disclosure in financial statements. Now, when we identify useful life, so our depreciation we can charge from different method like SLM, straight lining method, or a written down value method, or a unit of production method, whatever method management want. There is no specific competition, but there is one thing, whatever method we are following, that we need to consistently follow. And if we want to make a changes, then that will be considered change in accounting estimate in this Ind-As compliant entities. So here, that is one thing that is important, because apart from simple depreciation, we all know very well, because the accounting standard 10 also we know, and now Ind-As 16 also. But the another thing, that is componentization. Componentization. It means if there is a part of a particular plant and machinery or in building or any activities, so that can be segregated from original cost or original plant and machinery. Segregated means not physically segregated. We are talking about like separately identified. Uh, we can identify the costing of that part, or we can say if we want to remove that part from a particular plant or machinery and we want to replace that another part, so that can be possible. So if there is such type of possibility, it means one PPE has been segregated in small component. So this is called componentization, and in that case we need to charge depreciation based on guidance, not on accounting for depreciation. So how much in your fixed asset register, there will be a different line item. So like any plant and machinery, there is will be a specific motor, which is like a specific part, and we can say like any like a significant like a rod, or we can say like any pipelines or any generator set or etc. So different type of components we will segregate in our fixed asset register, and we will separately identify the life of each and every component. It might be possible that component have different life from original asset, or it may be a possibility that component are mostly in cases the same life. So if they are having a different life, in that case, we need to take a different life for each and every component, and depreciation will be charged based on their specific life. But if there is a replacement, we can say any specific major part which we have replaced, or we don't know the specific life from readily not available. So in that case, we can take life of main original component or original fixed asset part or PPE. So that life will be considered the same life for that component also, and depreciation will be charged accordingly. So this is a specific guidance have been issued. So we need to segregate, or we need to break the asset in a component where it's possible, and then we need to charge a depreciation. The depreciation charges for each period shall be recognized in P&L. That is not a specific issue, but there are some cases like we all know inventory valuation. We loaded depreciation on plant and machinery, which are directly used in the factory. So depreciation part, that should be a revenue nature part, but that are charged to inventory valuation. So it means that will be a part of another costing. And in same way, if we are saying in case of like builders, or we can say any heavy projects, we are creating some buildings, or we are using some plant and machinery, or we can say like any roller or any like machineries, heavy machineries in during our mining activities or during our like any business. So any depreciation of that plant and machinery or buildings which we are using to create another asset, so that depreciation can also be a part of that first of all asset. So that is the thing, as depreciation will be part of P&L. So unless we are not creating a separate asset, depreciation will be a directly hit to our revenue nature transactions or P&L part. Now property plants, any residual value, we know the residual value concept. So again, there is a judgmental concept. Generally, there is a standard practice that a 5% value is considered residual value, but it not a necessary criteria. It may be a different management based on choice, or based on like current practices or industry trends, or a management assessment. The price may be different. So any residual value and useful life, we know that are not required to make changes, or not required to every year revalue, but that need to revisit every year. At least we need to check whether there is a significant changes. If there is significant change, then we need to identify that type of transactions or that type of any changes, and we need to capture those changes in our financial statements, else we can ignore. So if we take MRL, management representation letter, also from our entity or like organization, so in that case we also identify, or in case of a fixed asset policy also, we generally mention that a residual value or useful life or asset conditions are revisited or reviewed by the management at each and every reporting period, or regular time or regular interval. So this type of transactions we need to take care. Apart from depreciations, from when we start, we all know that available for use. So when there is any assets which are available for use, though actually we didn't start it to use, but in that case also depreciation can be started. And depreciation, till when we need to charge, we know that till residual value, obviously we can't charge more than residual value. So if we are considering the 5% residual value, so we have charged the depreciation 95% of the value, it means WDV are 5%. So post that, we carry that asset on that amount in our fixed asset register, but there will not be a charge of depreciation. Asset will continue because we didn't physically discarded that assets. That's why that will continue, and we will consider in physical verification also. So depreciation cease when an asset is de-recognized. That is one thing which is important, especially when we are going to discard our one of the product line or our any plant or any business line setup. So in that case, because asset held for sale, there is no significant changes in the nature of the asset. If we physically we see, then one plant and machinery which we are using on a particular product, and another machinery or another plant which we are going to abandon. So the both will be look like similar, but we know that the particular plant or particular any assets lying at particular site, we are going to abandon that asset. So that will be called asset held for sale. But the same way, the another asset which we are using our production cycle, that will not be considered held for sale. So in that case, both assets are look like similar, but one asset depreciation will be charged because that is we are regularly using in our production cycles. But the another asset, we know that we are just maintaining that asset for held for sale purpose. So that depreciation will stop on that particular asset, but the asset will be revalued, or we can say like recorded in books of account or a financial statement or NRV basis. So any asset held for sale that will be gone by 105, that means the realization value model basis. So there will not be a depreciation charge on that particular asset. And apart from that, we see like depreciation generally, once we started the depreciation, then it will be continue unless there is significant stoppage during our production, or there is a significant activities we can say which stop our production line or use of the asset. So only that case depreciation we can defer, and otherwise depreciation will continue continuously will be charged. So and yes two, so schedule 2 life we have discussed a useful life mentioned in schedule 2, we are not required to discuss again. And depreciation method that will be reviewed on each and every financial year end. Depreciation methods, we whatever type of method management want they can use, so there is not much more changes. That is important. De-recognition also we discuss, and then we will discuss the disclosure part, because the disclosure part is somehow important, because generally there is a directly no financial implication, but generally being an auditor perspective or a management perspective, we missed out, because whatever information have directly financial implication, then we especially focus on that part. But any information or any disclosure part which are don't directly directly impact our value part, financial part, then generally we miss out. So we'll discuss later. De-recognition, we all know when any plant and machinery or we want to dispose of, or we de-recognize that assets when there will not be any benefit available, or we say if we are using any asset in our production cycle, but now we know that that production we have stopped that production for particular product, and that machinery which we have acquired for to produce some inventory, so that is not required right now. So in that case, either we will sell out that machinery, or either we will show machinery as held for sale. So if such type of situation, it means asset, if at a real cases when we dispose of, or we think that there is no such benefit we will arise, it means we are just maintaining that asset as held for sale. So in that case, we will de-recognize that asset from our property, plant and equipment, because there will be no depreciation charges. There will not be a like Ind-As 16 applicable. So that will be gone by a separate Ind-As. Any gain or loss arising on de-recognition, definitely that will be a part of a P&L. There is no significant part. But any Ind-As 116, we see like lease transactions. So there will be a separate Ind-As 116. So any sale and leaseback transactions, or we can say any right of use asset which we have created because of Ind-As 116. So any de-recognition of that asset that will be governed by Ind-As 116. We will not cover 16 here. And any de-recognition property, plant, equipment shall be determined difference between net disposal proceed. We all know that WDV and actual selling price, any differences between the gain and loss. So that is not so much a difficulty part. Disclosure part, that is important. So first of all, in case of accounting policy also, we need to give a disclosure for a depreciation rate and depreciation, we can say methods, which management is following for asset class. And apart from that, in financial statement also, we need to give, though at face of balance sheet, we all know that there is a net value, net WDV, we directly flow on the face of balance sheet. But there will be specific disclosures which we need to take care in our financial statement. That is, there is a movement part. So there will be, we can say like a property, plant and equipment a chart, or we can say a schedule. So that will be prepared in balance sheet. So first of all, like we can say movement of gross value. So opening gross value, and then additions, and then deletions, any addition deletion due to business combinations also, or any increase or decrease due to revaluation also. So, and after that, closing balance. So these type of reconciliation we are required to give for gross value, and same the reconciliation we are also required to give for accumulated value also, accumulated depreciation or impairment or like amortizations also. So we need to give gross as well as accumulated transactions, and then net WDV we will get, and that WDV will flow to the balance sheet part. So here, if we talk about like revaluation parts, so if there is revaluation and we know and we think that there is a implications is more than 10%, like increase in the value of the revalued asset more than 10%. So in that case, one more additional disclosure we are required, that we need to give as a footnote in our balance sheet fixed PP schedule, that the revaluation has been done during the year by independent valuer, and the revaluation done is more than 10%. So that we are required to give specific disclosure, and the simultaneously same disclosure, being an auditor, we are also required to give in CARO report also. And apart from that, any business combinations or any goodwills or revaluations or whatever informations we have, any impairment loss we have incurred, so that all will be part of movement schedule, or we can say fixed asset schedule in balance sheet. Any exchange difference gain loss, any impairment loss, etc. So this is the disclosure part we need to consider. And apart from there may be one more thing in case of like title deeds, because generally in case of immovable property, especially there may be some possibility, or there may be some cases where the immovable properties we have paid significant amount to buy out some property or some land, and agreement for sale has been done in the name of the company, but actual registry or title deeds are not transferred in the name of the company. So there may be some situation, whatever reason, there may be a dispute, there may be like any pricing, some criteria met out and anything else. So in that case, though substance over form we have paid, we have agreement for sale, so that will be our asset part, either our CWIP part or either our land and building part. But in that case, we need to give additional disclosure in balance sheet. So as per Ind-As 16 or CARO, there will be a requirement, or we need to give additional disclosure that so and so properties are held in, considered in the property, plant and equipment of the financial statements, but the same title deeds of same are not in name of the company, and we need to give the reason of also why the title deeds are not in name of the company. So these type of information, these type of disclosures also we are required to give in financial statements. And apart from that, any changes, if we have any like a Sandwich credit benefits or any forex fluctuation, so these type of any other adjustment we are required, so that can be also considered in gross value movement also. Existence of like this we have discussed, like title deed transactions or any security yes, in that case, borrowing also, if we have some loan amount or some borrowing amount in our financial statements, and which we have mortgaged our properties, either like land, building, plant machinery, furnitures, whatever. So any fixed asset or any PPE which we have mortgaged. So in that case, we are required to give a footnote disclosure in our financial statements that these assets are placed for some particular type of loan, and we can see like mention the bank name and etc. Though the same informations we are also required to give in borrowing cost disclosure, we can say like when we show the balance sheet the loan amount. So in that case also we are required to give the disclosure part. But here we also need to give some footnote that these are the pleased or these are the mortgage to the particular against such loan amount. So these type of situations, generally we disclosures or recognition criteria we follow, and then very much disclosure, day by day disclosures are going to increase. So being an auditor or being a management perspective, both sides we are required to take care, specifically disclosure part. And apart from that, we I think India 16 there is this is a, we can say like a overall crux part. And apart from that, we have some practical examples, some practical questions or FAQs. So I would suggest to refer like a ITFG and educational material on India 16 or India 38, which institute have been issued. So that we can refer. So that examples, where much examples are given there, and that is industry specific concerns. So any query which have been raised by either professionals or industries, so that are addressed by the institute. So that can also be helpful to us. And apart from that, we have like schedule 3 changes if we talk about, because right now we know that in India 16 there are not much more changes in Ind-As since beginning, but there are some schedule 3 changes which have been done in the last year and that are applicable from this financial year, from financial year 21-22. So that schedule 3 changes also have an impact in Ind-As, because we know in financial statements, so any disclosures which have been required or mentioned from Ind-As, that are required to be given in financial statements. But same way, any disclosures, any modifications, any changes have been done by Schedule 3, it means by ministry, so that are also part of the financial statement. So according to changes in Schedule 3, we need to consider the disclosures of Ind-As also. So now we talk about, so like the disclosure part, we have discussed revaluation. We have, I think, already have discussed. So if we have done revaluation, then the basis or independent valuer whether involved or not, and decommissioning liability. We initial and first slide we have discussed, and any revaluation surplus that will be restricted unless the asset are derecognized. So that are the disclosure part which we need to give. So when we have done revaluation, which person or independent valuer involved, and how much of the revaluation, whether it is more than 10% or not, or what basis we have done for revaluation. So these type of informations we are required to give disclosure part. And post that, there are some changes in Schedule 3. I think mostly we are already gone through the Schedule 3 changes, and Institute also have issued some guidance on Schedule 3 in, I think, January 2022. So there are some reconciliation adjustment which we are required, specifically required by Schedule 3, though these are not required from Ind-As, but because of Schedule 3, these are inbuilt part of financial statement. So we can say the disclosure which are mandatorily required from Ind-As perspective, plus any Schedule 3 disclosures, which both are combined together, we need to take care. So the reconciliation part, if you talk about, like, gross and net carrying amount reconciliation, we are required to do. And in that reconciliation, if there is changes more than 10% in revaluation amount, then we need to show the separately, or we need to give a footnote to why such so much changes, so any specific regions or any specific basis which we have followed. And apart from that, a company shall disclose whether the fair value of investment property. Yes. So in that case, investment property, which we can say like any property, generally what property we will consider the investment property. So that will be the any property which we are maintaining just to earn some income. So like when we are created or we have bought out one land and building, and we are just maintaining that building to earn some rental income. So that type of property considered investment property, and in that case, we also need to take care whether the that property also will be revalued or revisited each and every year. And if revisited, any impact is considered, then that will also be considered. We need to take care of disclosure part. And now company has revalued its property, plant and equipment, including ROU. ROU, I will say that there is no such specific revaluation is done in case of right of use asset. But if there is any increment in rental income which we are going to pay in future, or if there is any increase in dismantling costing at the end of the, or we can see like any changes in security deposit which we have given for a specific lease asset. So these type of changes happen. Then in that case also, because the present value of right of use asset will change, so we will say that the right of use asset ROU also revalued or revisited. So that may be a case also. Otherwise, the property, plant, equipment which are directly revalued and intangible asset, we will also consider in disclose in our financial statements. And in case of immovable property, we have already covered like title deeds which are not held in name of the company. We need to give specific disclosures, or any gross carrying value and title deed holders. So any related party are a title deed holder, or if the deeds are not in name of the company, then the justification and reasons why the deeds are not in name of the company. So these type of disclosures we are required. And some more thing which is we can say which are not part of directly Ind-As 16 but are directly linked to our this Ind-As, that is part of Schedule 3 changes. But though we know Schedule 3 just prescribes the aging of CWIP and intangible asset also we need to give. But CWIP is governed by Ind-As 16 because that is the capitalization part. So in that case, when we identify any costing part or CWIP part, then we need to segregate that part in aging bucket as per Schedule 3 requirement, and we need to give disclosure in our financial statements. So that aging may be a 1 year, 1 to 2 year, 3 more than 3 years, and that will also be required in two separate parts. One, the project in progress, and second, the project has been temporarily suspended. In case project are suspended or there is a delay, then we also need to give some justifications and reason why the project are so much delay in any region. So the costing part, same, the model of Ind-As 16, the recognition and measurement principle that will be followed by Ind-As 16. For CWIP also, though the disclosure requirement is governed by the Schedule 3. And so this is the property, plant, equipment, the Ind-As 16, which we have discussed. And apart from there are some costing like borrowing cost, any interest cost. So that will be governed by Ind-As 23, which is a separate Ind-As. So that type of transactions also will be a part of our PPE. So 2-3 things which are important. One more thing I would like to inform, which is relating to Ind-As 101. So that are for mandatory exemptions and exceptions and all, but that are relating to property, plant, equipment, this Ind-As. That's why I want to discuss here. So that is if we are going to implement Ind-As first time. So in that case, the management have choice to adopt the deemed cost model, or we can say like a fair valuation model. So in that case also, if we are going to follow the deemed cost model, then the price which is as per Ind-As 16, we have the net WDV value, or we can say like earlier accounting standard 10. So any net WDV value will be deemed cost, and that will be part of as a costing as per Ind-As 16, because now onwards we started to follow the Ind-As 16, but the costing will be deemed cost. So that will be the WDV price if you follow the deemed cost model. And apart from that, the same way, if we are going to follow the fair valuation model, then the fair value price will be considered the costing part, or we can say like our PPE value in case of Ind-As 16. And that fair valuation we need to take care. Then the rest of the provisions like Ind-As 16, whether the revaluation needs to be required or revisited in every year or not. So that is the different thing. So this type of exemptions, we have an opportunity, or like we can have any options to take the benefit of fair valuation also. So first time of transition. So that will also be covered from 101. But that once we have adopted the Ind-As, then that the costing which we have decided, that will be covered by Ind-As 16 in future onwards for subsequent recognition. And decommissioning liability, dismantling cost, we have already done. That will be a part of our fixed asset, and provision we have created, and provision will be done on discounting basis and will be governed by Ind-As 37 provision Ind-As. So these are overall pictures of like a PP, this Ind-As. So any specific queries or any concerns, so that for a quick basis we can have Ind-As 38, because that is not much more different. Mostly the recognitions and principles criteria or measurement criteria are same, disclosures are almost same. There are only the basis that which type of cost or which type of activities which we need to consider an intangible asset, that are somehow the differences. So Sumit, any queries I think we can have right now, or we can check?
Yes, Gyanji, 2-3 queries are there. You can see in the
Yes.
chat box, or should I read? Just a minute. Starting from Lalit ji, will extended warranty be capitalized or expensed off?
No, sir, extended warranty, in my view, will not be capitalized, because generally we paid the additional amount, and I think that will be a person to person basis, because there might be a possibility that one person want to adopt the like a warranty and another company doesn't want to adopt the warranty cases. So if we have option to pay additional amount, because there might be a possibility we acquired some property and then we are going to pay some additional amount. So generally, I think in my view, that should not be a part of capitalized. But if it is inbuilt in that price also, that we are paying the one costing, that there is no segregate bifurcation, we are paying like 5 lakh rupees for particular property. Yes, this price we will pay, but in that case, our warranty will be like not 2 years, but it will be 5 years. So we know that we have pay the bundled price, a one fixed price. So in that case, we are not able to segregately identify, or we can say like a revenue part. So in that case, we can capitalize. As generally we are ignoring this, or we will expense of this part.
Second query, what will be the treatment in case of asset purchase in cash in excess of 10,000 in case of partnership firm? Renu Gulati ji पूछ रहे हैं. But in case of partnership firm,
what will be treatment in case asset purchase in cash in excess of rupees 10,000 in case of partnership? But I'm not able to understand why we are discussing about rupees 10,000 prices, because I think in the cash prices, because generally we are in from income tax point of view, we have there is a provision that if any amount which we are paying more than 10,000, that will be disallowed. So there will not be any different treatment if we are saying that it is not revenue expenditure, so we can say like this will be allowed. The same rule will apply. Either it is revenue nature expenditure or a capital nature expenditure. The income tax department will not allow. But from perspective, we can say for India's perspective, if we say, then there will be no different treatment. Definitely, if we paid for a particular asset, then that will be our asset. Allowance and disallowance are not I think there is consideration from here. So either if we purchase asset, I think that should be a part of asset.
Anshul ji is asking on what type of assets this Ind-As will be used.
Sir, there is a simple like a layman condition. We need to identify any amount or any expenditure which we have incurred and which are met out two criteria. First, that the future economic benefit we are getting from this particular activity, and the second, the benefit will be over the period of time, or we can reliably measure the costing amount. So if just simple language, if I can say that the costing part we have identified, and we know that the costing part will be benefited to us over the period of time in future, then all type of such activity will be covered here. But there are some exclusion. So we can see this list by another way. Any transactions which are getting benefit over the period of time, that will be covered here, except some exceptions which are mentioned in first slide. So like India, right of use asset, or like biological asset, or asset held for sale, etc. So generally all type of capitalized asset will be covered here. So there is no
Deepak
specific criteria.
Gulati, Deepak Gulati ji is asking how we can value a property in dispute.
Property in dispute, generally the property is valued on a historical cost model. I don't think any benefits,
Any
price,
deviation.
any deviation because of dispute. Though there is a valuation concern because it might be a somehow possibility that because of some dispute, like specifically a immovable property, we know that in case of disputed property, the prices goes down because there is some rumors in the market that this property is disputed. So in that case, we have an option to independent valuer report. That is the best choice. Else the property will be valued on cost or evaluation model. There is no specific direct linkage with the dispute for valuation of property.
Ji. Manoj Agrawal ji is asking, is treatment of biological asset defined in AS also, or what to be treatment in the other Ind-As compliant company?
Sir, biological asset treatment are not defined in this Ind-As. That is defined when that will be gone from separate Ind-As, which is I think Ind-As 41, which
40.
is like I think
40 or
40 or
41?
40. I think 41 is for agriculture asset. I think sure. Maybe. So that will be governed separately. So there is no specific any provisions mentioned here for biological asset in this Ind-As.
Okay. And how spare part of the plant and machinery will appear in the balance sheet?
So first of all, we need to segregate spare part in two parts, or we need to discuss with the management whether these spare parts are specifically used for particular plant and machinery. And these are in such cases that we can maintain these parts over the period of time. Like the parts we have maintained may be used for after 3 years or 4 years, or maybe later on. So if these type of spare parts, then that part will be considered as part of property, plant and equipment. And in that case, if that part is relating to, we can say like any specific plant and machinery which is named A. So that spare part will be clubbed in A and shown in fixed asset register, or we can say like property plant schedule. But if spare part is general nature, that part we are not, we can't identify for particular machine, or we can say that part nut bolts, we can say that can be used in each and every type of machinery. So if these general nature spare parts, then that will be again the part of inventory itself, or that will be directly expensed by way of the consumables. So the simple question is, if machine specific part that can only be used in particular machine, then that will be a part of property, plant, equipment, and will be shown in balance sheet in fixed asset schedule.
Separate disclosure required in case of assets held for sale?
Yes, sir. There will be a separate disclosure required, and I think that will be disclosure on the face of balance sheet also we will require, because that asset will not be a part of our property plant schedule. So Ind-As 16 or Ind-As 38 will not be governed here. So separate valuation will be done, and separate disclosure on face of balance sheet we are required to give. For that, we can take any balance sheet. I think 2017 Janam, but that is private limited company. I don't think that will be available in public domain right now. So separate disclosure is required. Yes, sir.
Just connecting with the spare parts. Spare part is a part of PPE. Then when we need to start depreciation?
So depreciation will start very first of the day. If I see like for transition period, simply example, because after transition you will not face any problem. Like for current year, if I purchase the spare part on like 5th August, then easily I know that this is the capitalization date. But if in case of transition period, the spare parts have been like acquired before transition period implementation of Ind-As. So in that case, we need to identify the depreciation since starting, and then the depreciation up to transition date will be part of retained earning part. So the life of depreciation will be considered the plant and machinery to which they directly relate. The same life we will use.
Okay. And last query is, impairment value of the asset need any separate disclosure?
Yes, sir. If there is any impairment we have done, then in property, plant and equipment schedule, which we are yet talk about movement schedule. So in that schedule, apart from depreciation or amortization for the year, we also need to give a separate column for any impairment, like loss or any impairment activity also. So we need to give separate disclosure. Yes, we have done impairment analysis and on what basis or how much amount we have impaired for particular asset. So we are required to give separate disclosure in balance sheet.
Okay. I think this has been discussed in detail. We can move forward.
So can we start now like another Ind-As
Yes.
38?
38. Because
Yes.
we have half an hour, so we have to complete
Yeah, no issue.
intangibles also.
So though we have discussed Ind-As 16 and in the same way Ind-As 38 also, there is no much more changes between these two Ind-As, but there are some initial recognition, or we can say like initial identification criteria, there are the different. Subsequent measurement or disclosure mostly similar, but initial recognition are the different. So which type of transaction? So first of all, we discuss about any we can say any amount incurred or any activity done by organizations which are generated any asset or any benefits in form of intangible nature, that will be considered an intangible asset. But not all intangible asset will be covered or will be governed by this Ind-As 38, because generally we think that all activities same way, any immovable transactions, any activity or any expenditure which we have done which created an immovable asset will be covered here, but there are some exclusion. So which type of exclusion? First of all, we know in balance sheet like deferred tax asset, this is deferred tax asset. We have virtual asset, but that will not be covered here. That will be covered from Ind-As 12, which is a separate Ind-As. And we can say right of use asset. So this is also a notional asset, or we can say an immovable asset. Sorry, intangible asset, but that will not also be governed from this Ind-As. That will be a out of purview. Goodwill acquired under business combinations, that will not be considered here. And similar way, like any recognition measurement of exploration, like R&D expenditure which we have done for any mineral activities or any specific some product identification or some new products. So these type of activities, if that are specifically governed by industry specific or specifically governed by separate Ind-As, then that will be covered there. Otherwise, all type of any activities, any transactions which created or which derived some intangible benefits, that will be covered in this Ind-As. So this is the residual definition. We can say that first of all, we need to take care any activities which are in intangible form and which are providing benefits over the period of time, and the cost which we can measure easily or reliably, then all such type of cost will be covered here and will be considered intangible assets, subject to some exception or some exclusion, which are these 3-4 activities and transactions. So now the question, the major criteria, there are somehow some important things which we need to take in intangible asset, because there may be some cases where we start to for a new product, we want to launch some new product and we start a market surveys. Yes, we are going to perform like survey activities or any, we can say like quiz, or we can have like some research on like newspapers and trends and any old customer patterns, etc. So all these type of situations, all the activities, all the costing which we have incurred, that are part of research activity, we can say. But that research part, if there is a situation that after doing such activity we found that that business or that product is not feasible to us and we drop down that activity, so in that case the activity has been done and we know that we gain some knowledge, we gain some industry knowledge or some market trends for particular product, but that will not be directly useful or directly beneficial for us in future, because we are not going to like start that type of product. So these type of activity, if we are not getting any future economic benefit from the activities, so though we have measured the cost reliably, but the future economic benefit will not receive in future. So such type of transaction will be ignored from perspective of intangible asset. So this is the ways, we and same criteria, any transactions which are giving the future benefits and costing are easily identifiable, then will be intangible asset, but that should be in intangible form. So there is a minor difference, that is tangible and intangible. And apart from that, we discuss about so costing parts. So we know there are the two things. First, the benefit should be over the period of time or in future. And the second thing, each cost should be reliably measured. So when we talk about costs, so which type of cost we need to consider? Because in case of tangible asset, we easily identify that so and so prices which we have paid to the supplier, and any duties, and any site restoration costing, any dismantling costing, whatever transportation and all things. So we can easily identify these type of costs. But in case of intangible assets, there may be a situation that intangible asset may be in-house generated, or intangible asset may be some acquired from outside the organizations. So in that situation, we need to identify, or we need to capture the costing part very carefully. So if we talk about like we identify, we acquire some intangible asset from outside, like we can say like any trademark, patent, or brand, etc. So in that case, the actual direct price which we have paid, that will be a part of intangible asset. Any same way, any non-refundable duties or any taxes, any additional amount which we have paid to the supplier or government, then that will also be a part of intangible asset. There is no difficulties here. But where we are in case of some in-house resources, we can say like internally generated, then there will be some difficulty, or we need to identify whether the intangible asset created or not created. That is the much more important thing. So first of all, if you talk about first of all that we have identified any asset which is met the criteria of intangible asset, and we have to recognize intangible asset, but on how much price, then the question will come, and then the first answer will be costing price. And costing meaning the direct cost which we have incurred plus any direct attributable expenses, like any brand name which we have purchased from any supplier, or any trademark we have purchased from some person, but we are getting registered supplier trade name in our name. And then if we have some clause that we need to 2-3 months, or maybe some period we need to adhere the compliances of that our agreement between the supplier. So these type of any costing, registration cost of the brand name, or any additional cost which we have paid to the supplier for like non-competing fees, etc., because of purchasing of that brand. So that all will be a part of our costing part. And this is the like directly cost which we have paid. And apart from that, if there are some any activities like same way, any key asset which we have, any activities which we have done to use that asset in our way, like any logo we have captured from somehow, and then there is modifications in the logo, so any cost incurred by us, so that will also be a part of our costing. But in the same way, deferred payment credits, so there is not much difference. Same we can say like if we have a agreement with our supplier or our like party for any purchase of intangible asset, that the payment will be done over the period of time. So that payment amount will also have some interest part also. So if this is a normal credit period, then that will be a part of intangible asset. And if this is the beyond the normal period, or there is some significantly delay, which might be a case of like COVID cases where there is a financial crisis, so there are the significant delay. So if these type of delay, and that's why we have to pay some additional consideration or additional interest cost, then that is the abnormal cost and will not be considered our costing part. So that we need to take. The question will start like any our mind game will start from here, like business combination. So any acquisition, we have obtained some asset and business combination. So in that case, we know that business combination, we have asset acquired on fair value basis. Generally all assets are acquired either on costing basis or fair value basis. So in that case, whatever value have been identified by our independent valuer team or our management based on due diligence, so that will be fair value, will be our intangible asset, but there should be a proper justification. And if we talk about like what value we need to take here, so the best example is a quoted market price. If there is that type of particular, if we say any automobile sector, we are getting some design for a particular motorcycle pattern also. So if that type of R&D or like prototype, or we can say any model design, if sold outside the market, any open market, then how much price the entity or supplier can get. So that price will be considered an intangible asset costing price. So same price we will follow the fair valuation price from open market. And if the open market price are not available, then definitely the last option, the costing price, which we can have directly. And in the similar way, acquisition of a government grant. So if we are getting any benefits from government grant perspective, we can say like any tax benefits which we are obtaining, or any registrations or any specific license have been provided by government at the nominal cost. So if this type of such cases, then in that cases on the prices, generally the fair valuation we need to take care. So if we are getting any license and any transactions the like the nominal prices, so fair value and we are getting the benefits. So generally we need to recognize on fair value. But if there is a specific requirement of Ind-As 20 or the government grant Ind-As specifically applicable, then definitely that the thing will be come out from purview of the Ind-As 38, and once it is come out, then the Ind-As 20 government grant will be applicable, and then the criteria from different things that will be considered. So if any activity intangible asset license has been provided which met the recognition criteria and we define that is government grant, then the separate Ind-As we will consider. Apart from the another category is in case of intangible asset, that will be internally generated assets. So the first of all, internally generated, we can say like goodwill or brand, over the period of time, if being a practicing chartered accountant, we are having a firm like more than 10 years or 20 years or 30 years. In that case, we have created some our own brand or goodwill. So that branding and goodwill, we didn't incur any costing part, and we are not able to identify or to value the how much costing and how much prices of our goodwill prices. So generally in our books of account, unless until we sold out our business, we will not recognize such internally generated goodwill or branding which we have created. So it means we are making our brand in the open market, but we are not recording the transaction or that costing in our books of account in financial statement. Same way, internally generated intangible asset, but in another way. If example for best example is automobile sector. Generally, in that case, there are some they are doing day-to-day basis some R&D activities, and they are trying to produce and to identify some new type of models. So in that case, they are generally first of all do the research activity, then they do the development activity, and they created a prototype model. So this is the end. We can say like a ideal model that we will follow, like a prototype that will be followed, or mounts and dies they have created, or some design they have created. This type of structure we will consider in our new product. So that type of costing which we have incurred, or we can say like website development costing which we have incurred, to such type of costing, that will be considered our intangible asset from this Ind-As perspective, because this is not generally notionally asset, and we can easily identify that asset, or we can sell out that asset. So if such type of activity other than goodwill and branding, if we are incurring any amount to maintain or to create our own different intangible asset, So such activity will be considered intangible asset, and we need to take care and we need to recognize that asset in our financial statement. But in that cases, there will be two activity. First of all, the research activity, and another is development activity. Because in case of any new asset or any new research, the first of all, like first example I told that in case of a new product launching, we have done some survey and some research and some like quiz competitions and some newspaper study and all things. So these all are covered in research part. So if any activities have been done in research phase, but the final outcome has not been completed and not in transformed in intangible asset or in the some criteria. So in that cases, that expenses will not be considered, will not be recognized as intangible asset, because we have done some expenses, we have incurred some amount, but that amount is not beneficial for us. In future, we will not get any future benefits. So in that scenario, that research phase costing will not be considered intangible asset. But simultaneously, if we have done research part, and apart from that, that research are directly linked to the development part also. It means we are doing the first of all, we have done research, and then immediately after research, we have started to make some development of that particular product model, prototype model, or we started to create some any website or we can say some like a license model and etc. So these type of technical evaluation, and we have incurred some professional salary, professional fees, and our employee salary also, and our particular some R&D centers rental cost, and any other information, any other costing we can say like electricity and all the things. So if these type of activities have been done, or in case of development phase, which is actual phase of creating intangible assets. So any expenditure, any amount which we have incurred during development phase, that will be a part of intangible assets. So that we need to consider in our intangible asset costing. And because we can easily identify, we can sell out that intangible, that prototype model, that our R&D study, we can sell out. So that will be our intangible asset. The thing is, so we need to identify whether an asset can be intangible. That depends on the scenario, whether we are able to take benefit in future, plus whether we can easily or readily we can measure the costing, what we have cost incurred on that particular asset. So if both the criteria met out, then we can recognize the intangible asset. But on how much price, that we have discussed the costing which are directly linked to the creation of that intangible asset, any salary, any electricity charges, and any rental costs, any employment and professional fees, and all these development activities will be a part of intangible asset costing. So there are some of the information, so we can say like some of expenditures which we have incurred, but we are not considered that part of intangible assets. So expenditure on intangible items shall be recognized as expenses when it is incurred. So any expenses which we have done, that will be considered expenses, but if they are met out intangible asset criteria, or we can say in case of business combination, because generally in case of business combination, we can say like a fair value, we have some paid some additional amount for goodwill purpose or for like branding purpose. So that amount we can identify as an intangible asset, and we can measure and disclose in our financial statement. So we say like if example is some of the below examples have been given, like expenditure on startup activities. So we are going to start some business, and we have done some activities. We have research, and we have identified the factory locations and plant locations and etc. But these all are pre-phases. These are not directly linked to the development phase. And simultaneously, the training activities which we are giving to our employees, like one of the person who is like a person who are trained from out of country and from the initial supplier or vendor, who have some knowledge to operate the plant and machinery, and that person by way of training to educate the people of organization, to employees of the organization. So they have created some knowledge enrichment in between the among the peoples, but these activities will not be considered as intangible assets because these are national activities and we will not be recognized, and we will not say that the costing of training activities and any advertisement or our promotional activities which we have done, so that will be our intangible assets. These are simply activities which are required to running a business or which are running to operate on some plant and machinery and all things. So any specifically costs which are directly linked to the development phase, then that only cost will be considered as intangible assets. Rest all transactions, all expenses, all amount incurred will be considered as expenses. Same criteria, the measurement, we say the initial recognition. So we have already discussed mostly the initial recognition will be there only a two models, fair valuation and the costing model. Generally, we prefer the costing model. And in case of business combination or we acquire from outside the organization, then in that case, we prefer the fair valuation model also. Subsequent recognition, the same way costing and revaluation, if you follow the costing model, there is no challenge. The costing which are already in our financial statement, we will continue. But in case of we are going to follow the revaluation model, then the same principles like tangible assets we have discussed in Ind-As 16, so same principle will be followed here. We need to give a separate disclosure. So what basis we have taken for a revaluation, and for entire class of revaluation is required. And apart from that, like independent valuer has been involved or not involved, and any more than 10% revaluation changes. So all these factors come into the picture if we follow the revaluation model. And first, that costing we have discussed. So in cost model we follow, then generally simply we will do the presentation and disclosure part in the movement schedule, like a costing, gross value of the costing, accumulated depreciation, and then impairment, amortization, and then at the end we can say like WDV prices. In case of revaluation, we need to give fair valuation and date of revaluation. And any same way, any revaluation has been done, then in case of increase, we need to consider in OCI part, and in case of decrease in PNL part. So all concepts are same. And the regular basis, we need to revisit our intangible assets. If there is no significant changes, then we can ignore, else we have to consider the revaluation price or revalued figure, or we need to update in our financial statements value. The increase and decrease we have already discussed, so there is not much more changes because these are not directly linked to our business activities or our day-to-day activities. That's why we will say any increase in the such type of gain which is not directly our direct activities gain. This is a notional gain, so that's why we will transfer this amount to revaluation reserve in OCI. And in case of when in future there is a reversal, then that price first of all will be adjusted with the revaluation reserve, and then if any more than that reserve earlier created, any additional decrease in the price, then that will be part of PNL part. So apart from that, when the revaluation reserve which are reported in OCI will be de-recognized, or we can say like from removed from our financial statement. So that is the scenario when the asset is de-recognized, then that part will be removed from our financial statements, and that will be reclassified to the PNL part. We can say like retained earnings, general reserve. And amortization part, so here somehow important, I think in accounting standard 26, there are some rebuttable presumptions we have that if there is no specific life has been identifiable or mentioned in any for intangible asset, then in that case we can have assumptions that the intangible asset life we can take 10 years. But in case of intangible assets, as per Ind-As 38, there is no such a specific or mandatory guidance regarding 10 years assumptions. So useful life, which should be on systematic basis, or which should be in such a way that we factors of the benefits which we will obtain in future. So management can identify, or management can take assessment based on their past trained or their personal knowledge or industry knowledge. So they can decide the useful life of intangible asset. So in that case, so intangible asset life can be a infinite and can be a some limited period of time. So indefinite period if we have, but in that case we need to identify how much time and how much period we will you can take a benefit of such type of asset. If we are easily identifiable to identify the number of years, then there will be a definite life and we will amortize that asset over the period of time. But if that is not readily available, not possible for the management as on recognition of intangible assets, then in that case we can ignore the amortization of that intangible asset. So amortization, once we identify the definite life and useful life, then in that case, the amortization will be over the systematic basis over the useful life of asset. We know either it may be SLM basis or WDV, whatever information they are want. Generally, the SLM basis is followed for in case of amortization, but that is different things. So how much benefits they are getting from each and every year. And depreciation charge for each period shall be recognized in P&L. Yes, we all know very well that the depreciation is first of all generally charged to the P&L unless this amount, this asset is used in a creation of another asset or some another product. So in that scenario, the depreciation will be loaded to that particular product, like inventory valuation. So apart from inventory valuation, or we can say like another asset creation or another product or brand name creation. So in that case, the loading will be done on another asset which we are going to create, else depreciation will be or amortization will be a part of P&L. Derecognition, when we will do derecognize the intangible assets, obviously the first of all when we are going to dispose or we are going to sell this asset to some person. So in that case, or if we think that the intangible asset, that the prototype model which we have created, which we have made, and that product is out of market, that product is now no more required. So if that prototype or that brand, that technical like a study which we have incurred or we have created, intangible asset, that is not usable for us. So in that case, we can derecognize that asset, or we can charge to the NRV prices, or if we are going to sell to the outside the person, then in case of the actual costing or fair valuation, whatever we are getting from the outside party. So on that price, we will book in our financial statement. Any gain or loss arising from derecognition of intangible assets? Yes. So any gain and loss from derecognition, that will also be a part of P&L. But in case of 116, we know the ROU that will be a sale and leaseback transactions and the right of use assets. So in that scenario, if before the end of lease period or maybe some extension in the lease period, there is any increase and decrease in lease asset, so that will be governed with 116. That will not be though in nature of notional or intangible nature, but will not be covered here in Ind-As 38. So any derecognition of intangible asset will be difference net disposal proceed. We all know that the actual price which we are right now recording in our financial statement and actual price on which we are going to sell out or we are going to dispose or we are derecognize that asset. So difference will be our gain and loss and will be considered in our P&L account. Same way disclosure part. So again, in case of disclosure part, we need to first of all mandatory requirement, that is useful life. We need to mention the useful life, any amortization rate which we are using for our intangible assets, any gross amount like movement schedules, so any gross amount opening, then additions in intangible asset, then any deletions, and then closing gross block amount. And in same way, accumulated amortization amount, opening, addition, deletion, and gross amount. Any impairment testing also. So all these movement schedule in case of gross as well as accumulated part, amortization part. So both the movement schedule we need to give in our disclosure financial statements. And apart from that, there is any significant revaluation, any major revaluation, then we need to give separate disclosure, any more than 10% disclosures. So these type of informations we are also required to give. Apart from that, like any impairment testing we have done, because in case of Ind-As, it is required that management is generally revisit unless until there is significant changes. So management will not require to make adjustment, but they are required to do revisit or do evaluation on on each and every reporting period for tangible and intangible assets. So if there is any impairment loss which management think that is required to be incorporated, that is required to be done in our financial statements, so that will also be captured in our movement schedule, and we are required to do separate disclosure in separate column disclosures that this is the impairment testing and this is the impairment loss which we have booked on this intangible asset. So that is also required. And some other disclosures we can say, like a region for a in case of if there is some intangible assets, we are not taking indefinite life, and we are saying that yes, intangible asset we have created, but we are not amortizing this asset because we will get benefit end of the in the indefinite periods. So we need to mention that some basis, some conclusions on what basis the management decided that the benefit will be driven in the long term. So that basis will also required to be given in financial statements, either in the accounting policy or the by way of notes accounts in the disclosure part. Any remaining amortization period which we can easily identify if we have given some life, then definitely we can identify the additions and based on the life. And any existence and carrying amount of intangible asset title, same the questions, the title deed restrictions, if any intangible assets which we acquired from outside person, but the registrations and from transfer are not done in our name. So till the such situation, we also need to mention that the registration is not in our name. And any research and development expenditures which are incurred during the period. So I think there is some R&D expenditure. So if we are going to take a benefit of some like there are the different deductions also available in Income Tax Act. So if we are going to take benefit of the deductions, or there are some specific requirement in Ind-As 38 also, that if there is any R&D expenditure which we have incurred, so we need to give a separate footnote disclosure in balance sheet, such so and so expenditure. And even in case of different categories like salary cost, and we can say like a transportation cost, and we can say like a material cost. So these type of disclosure part also we are required to do in our financial statements. So this is basically we have briefly covered our Ind-As 38. And this is mainly difference because of recognition criteria and somehow internally generated intangible asset categories. Otherwise, the rest disclosure provisions and transactions are mostly similar to the Ind-As 30, Ind-As 16 also. So there is much more, not so much changes except recognition and internally generated and measurement criteria for intangible asset. So Sumitji, any queries we can take here right now? So this is a brief summary of Ind-As 16 and 38, both are covered from my side. So any person having any query, so we can have, we can discuss here the query. Sumit sir?
Yes, Gyanji.
Yes, sir. So, sir, do we have any queries so that we can take up right now?
I think there is no query on this intangibles, and wonderfully you have covered the topic well in time.
Sir, so we can say like 5 to 10 minutes we are delayed because at the starting of the timing, and so there
no
is
problem, sir, no problem. But ultimate topic should be covered, and that has been done by you.
Yeah.
And there is no other query.
So if anybody have any query, then they can get in touch with Sumitji, or they can directly write down or like a message to me if they have in future also query regarding to these two Ind-As. So we are happy to share our thoughts, or there will be a great interaction with all of people. So if nothing else, then we can close our sessions.
Sure. And thank you, Gyanji, for sharing your presentation. And I have shared the link for both the presentations. And then your number is also there. So if a participant have any query, you can test WhatsApp him for this Ind-As, so you can get the answer. And thank you, Gyanji, for your wonderful session.
Thank you all. Thank you. Have a good day.
Thank you to each participant. And tomorrow, our session, Saturday, Sunday, from 12 p.m. So please kindly note the time, 12 to 2, Saturday and Sunday as well. So we will meet you again tomorrow morning.
Okay.
Thank you
sir.
once again.
Okay.
Thank you. Bye. Thank you.